Yeah, look, thanks, Peter. And I mean, it is fundamental. How much nickel are you going to get out of the project, and the impact that has on the economics of it overall is crucial. If we look at the BFS and we look at what the current nickel price is, we're looking at nickel prices come back up to around about $10. And if you look at adjusting the all-in sustainable cost figure, you were conservative in the BFS, but even if you add some inflation, you might bring that up to $5. So a simplistic equation says a nickel price of 10, a cost of 5, but then you've got to throw in the recovery rates, etc. Again, probably this is coming back up to the macro view, the situation with the global nickel market. Would you like to make a comment about that? Because it's quite interesting.
No, that's a good point. And look, clearly you can look at the feasibility study numbers. We ran a base case of about $10.70 a pound, and an upside case of about 15, and the spot price back in November was about $12. So, and the nickel price, as you said, is just around 10. So it's not far below our base case. So and the project was economic at those levels. So that's good. Subject to all those recoveries being all the BFS numbers. The interesting thing about the macro is, we have had a lot of Indonesian nickel come out, probably more than people expected, or certainly ramped up more quickly. And I think there was a belief, and I must admit, I was of that school as well, that there was going to be a lot of nickel pig iron, but whether the Indonesians were able to produce as much mixed hydroxide precipitate as they thought, and it looks like they have been able to do that. And I would guess and argue that probably too on the demand side it's a little bit softer because of the global uncertainties of risk of recession and the Chinese economy. All of those things I think is probably slowing up the nickel demand in EVs. I haven't seen all the data yet, but from what I've read, that would appear to be. And so there's effectively a balanced market or a small surplus, and as a result, nickel prices have gone, are sort of basically trading in that sort of spot where it's kind of considered to be a balanced market. My understanding is even at these prices, a lot of nickel production is at its sort of marginal cost or actually a bit below it. So what's happened is over the last few years is costs have gone up a lot, and as a result, people at $10 sounds like a good price, but if you bake in all the inflation and the cost of the additional cost of labour and power and all the consumables, and really we're not seeing the nickel producers making a lot of money. A la the write down by IGO of Western Areas. Panoramic obviously had some production problems and some breakdowns in the plant, but even things are going normally, no one's making a lot of money. So clearly the costs have come up, and that's made it tough.